Bismillahirrahmanirrahim. Assalamualaikum warahmatullahi wabarakatuh dan selamat pagi. Yang berbahagia Datuk Jamaluddin Nasir, Ketua Pegawai Eksekutif Kumpulan MARC, Datuk-datuk, tuan-tuan, puan-puan dan para hadirin yang saya hormati sekalian. Today, outstanding Malaysian bonds and Sukuk amount to 1.8 trillion ringgit, or about 111% of GDP. Close to half are corporate bonds and Sukuk, with the rest comprising government papers. These instruments play a critical role in financing the economy, contributing significantly towards fulfilling our country's development agenda. The domestic bond and Sukuk market has demonstrated its resilience in the face of past challenges and was a source of stability for our broader financial system. It was able to recover quickly despite massive foreign outflows during the taper tantrum in 2013 and the US election of 2016. Even during the pandemic, large defaults did not occur. In fact, gross issuance of corporate bonds and Sukuk has steadily increased post-pandemic. New supply for the first half of this year amounted to 52.5 billion ringgit, indicating continued corporate demand. Good take-up rates also reflect investor confidence in the Malaysian economy. We expect gross issuance of corporate bonds and Sukuk to remain healthy, with 110 to 120 billion ringgit to be raised in 2022. The growth of this market segment will be underpinned by Malaysia's strong sovereign ratings, well-developed corporate bond infrastructure, experienced market professionals, and a conducive regulatory environment. Another positive development is FTSE Russell's removal of Malaysia from its World Government Bond Index watch list. This is crucial for the market to be accessible to a wide spectrum of investors. It also preserves Malaysia's track record, given we have been a component of WGBI since 2007. These fundamentals put us in a good position to weather an uncertain and volatile environment. Conditions ahead will certainly be challenging, as rising interest rates may dampen market activity. With global growth anticipated to weaken, stagflation risks are increasing, compounding investor fears. Ladies and gentlemen, despite the current climate, I believe there are opportunities in the Malaysian bond and Sukuk market. Firstly, bonds and Sukuk represent a good option for investors during periods of uncertainty. They provide diversification benefits, are relatively safer investments, and offer consistent income flows. Currently, only 12% of outstanding bonds and Sukuk are foreign currency denominated. Issuers tend to gain by borrowing in ringgit, as it reduces their vulnerability to volatile exchange rates. Therefore, corporates should capitalize now before their funding costs increase. As at end June 2022, Malaysia's outstanding Sukuk represents 39% of global outstanding Sukuk. This puts us ahead of Saudi Arabia and Indonesia as the world's largest Sukuk market. The country is also a regional leader in sustainable and responsible investment, SRI Sukuk. As of November 2021, Malaysia accounted for 56% of SRI Sukuk issuance within the ASEAN 6 countries. Last year, 7 SRI Sukuk with total program size of 15.5 billion ringgit were launched with the SC. This highlights growing demand for sustainable finance as well as transition financing. In fact, there is growing diversity in the utilization of proceeds, with projects transcending the initial green undertakings. Furthermore, Malaysia issued the world's first sovereign US dollar sustainability Sukuk in April last year, which commanded a bid-to-cover ratio of 6.4 times. The successful reception of this Sukuk demonstrates strong appetite for Malaysia's credit despite the rise in yields. The introduction of SC's SRI-linked Sukuk framework last month, therefore, aims to reinforce Malaysia's leadership in both Islamic finance and SRI. This framework will facilitate fundraising by companies towards sustainable development. We hope to attract a more diversified range of issuers and investors with its features, which includes sustainability performance commitments. In the medium term, local bonds and Sukuk are also expected to play a major role in the country's economic recovery and growth. This includes infrastructure projects identified under the 12th Malaysia Plan. Under our Capital Market Master Plan 3, a priority area is to facilitate market access for small and mid-sized issuers. The corporate bond and Sukuk market is currently dominated by large issuers. It needs to be inclusive by widening the credit spectrum beyond the AAA and AA rating bands, thus enabling smaller companies to tap the market. This will increase the variety of investment products and yields, as well as provide opportunities for credit rating agencies to broaden their service offerings. On this point, I would like to emphasize the vital role of independent assessments by domestic rating agencies, such as Malaysian Rating Corporation Berhad. Their in-depth analysis and diligent monitoring help investors make sound investment decisions, in addition to preserving market confidence. Moving forward, the SC believes credit rating agencies can play a much bigger role domestically and regionally. Their in-depth experience in Islamic ratings can be used to enhance the ratings methodology for ESG and sustainable development issuance. There is also potential to establish regional collaboration and footprints in this area. This will entail continued efforts by rating agencies to enhance resources, capabilities, as well as innovate the product and services. Ladies and gentlemen, in closing, I wish to emphasize that we must ensure that our market continues to thrive in the face of adversity and remain vibrant. After all, corporate bonds and Sukuk are a key driver for the Malaysian capital market and a critical source of financing for the economy. The bond and Sukuk market has demonstrated continued resiliency in the face of challenging global environment, and indeed has been a source of stability for the Malaysian financial system. Opportunities exist in terms of widening products and access despite the rising interest rate environment. And it is incumbent that Malaysia continues to lead and pioneer Islamic and sustainability products. Given the difficult environment ahead, it is important to work together to overcome the challenges. I'm confident that we possess this necessary resiliency and decades of experience to persevere. This, coupled with the steadfast dedication of market participants, will help propel the bond and Sukuk market forward. On the part of the SC, we will continue our industry engagements towards this goal, as well as uphold our commitment to effectively develop and regulate the Malaysian capital market. On that note, I would like to express my appreciation to MARC for inviting me to deliver the keynote address, and wish you all a productive conference. Thank you.